Axcelis is a leading supplier of ion implantation and other processing equipment to the semiconductor industry. One of the main categories its end products go into are electric vehicles, which of course have not been growing as expected, and so Axcelis revenue growth has decelerated and year over year are declining. Still, investors are interested in this semiconductor company and are asking if they should buy the stock at current prices. I'll answer that question in this video. I'll evaluate the company's previous few years of revenue growth, look at the cash flow from operations and returns on investor capital, and then compare them against the valuation to determine if Axcelis is a good buy at current prices for long-term investors.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Looking at this company's revenue growth over the past 10 years, I noticed a couple of things. At first, I noticed the volatility, lots of ups and downs here over the previous decade for Axcelis Technologies, more so than most semiconductor companies. Now, the semiconductor industry overall is cyclical, and so you see these ups and downs across the board for semiconductor companies. Axcelis is certainly in line with the industry in terms of the volatility. The second thing I notice is the deceleration in revenue growth, in especially the declines. The declining years, the lows have been lower progressively over the previous decade, and the highs have been lower. That's not an attractive trend you like to see. In the most recent quarter, revenue came in at negative 18.65%, and management is forecasting a quarter over quarter decline in revenues in the first quarter of 2025. So revenue growth not looking strong for Axcelis in the near term. Thankfully, the company is comfortably positive in terms of cash flow from operations. So while you do notice those big ups and downs in revenue growth for Axcelis Technologies, you don't notice a similar trend in its cash flow from operations. And so that demonstrates to me that the management team has learned how to manage the business through these ups and downs and still maintain cash flow from operations growth over the previous decade. So in the most recent quarter, 141 million in trailing 12-month cash flow from operations. And that's up from about a decade ago where the company was flat in terms of cash flow from operations. It was roughly break even. So they have made progress in that regard despite the ups and downs. And so that's a good sign for investors. And I see a similar trend with its returns on investor capital. Remember, this metric measures how good a company is at generating profits out of the capital that they put into the business. So every business puts capital into the business, whether it's working capital or fixed capital. Working capital is on things like inventory. Fixed capital is on things like manufacturing facilities. And the returns on investor capital incorporates all of those and measures how much profit a company is generating from the money it spends on capital. And you'd like to see this number be above a company's weighted average cost of capital. My estimates, even though I have not computed a precise weighted average cost of capital for Axcelis, my estimate for this company's WACC is between 9 and 13%. And at 21.43%, the return on investor capital is comfortably above my estimated weighted average cost of capital for Axcelis Technologies. So that means the company is generating shareholder wealth because it's generating more returns on capital than it has to pay for capital. So the return on capital is higher than the cost of capital, which creates shareholder wealth. At 21.43%, it's also much higher than where it was a decade ago, again demonstrating improvement in the business, in managing the business over the previous decade through these economic cycles of ups and downs. And finally, let's look at valuation. And I measured valuation on two characteristics, on the forward price to earnings and the price to free cash flow. Let's start with the forward price to earnings at 16.18. It's near the lowest the valuation has been according to this metric going back 3 years. And compared with the average stock in the S&P 500, Axcelis is relatively cheaper. The average stock in the S&P 500 trades at a forward price to earnings of between 20 and 23. So at 16, Axcelis is relatively cheaper. Similarly, on the price to free cash flow at 14.96, it too is near the lowest it's been going back 3 years. And compared to the S&P 500, it's also lower than the average in the S&P 500, which is also around 20 to 25, a wider range there I'm giving because the price to free cash flow varies more so than the price to earnings. The denominator, the free cash flow, is more varied than the earnings numbers for most businesses. So to me, looking at the company's valuation metrics suggests that the stock is undervalued. Now, in the near term, it faces considerable headwinds. The end markets that it's selling into, specifically for electric vehicles, are slow to grow, slow to expand, and the existing inventories in the market seem to be sufficient to serve the needs of this market. So there isn't too much manufacturing going on of new inventory because of the cautious approach of all participants in the end markets that Axcelis operates in. Longer term, however, I suspect that this market will expand as the computing requirements for nearly all of these end markets are increasing because all of these technologies, including in electric vehicles, in other types of devices in the industrial market, are all getting infused with more technology because of the developments in AI and the returns on investor capital that businesses are getting from their investments in AI. Consumers like what they're seeing in AI, in these product enhancements with AI. So consumers continue asking for and paying for these types of products that have more technology, whether it's in cars, whether it's in electronics, whether it's in your refrigerators, all of these, all of the above, consumers are willing to pay for higher prices for these extra technologies. So, in other words, to answer the question I posed in the headline, is Axcelis Technology stock a buy, hold, or a sell? I have it rated as a buy. I think it's a buy. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.